Imagine making billions of dollars by charging people for the privilege of spending their own money. Sounds impossible, right? Yet that's exactly what Costco has done, transforming a simple membership card into one of the most profitable business models in retail history. In 2023 alone, they made $4.6 billion from membership fees. That's more than the entire GDP of some countries. And here's the kicker. It represents 73% of their total profit. This isn't just another retail success story. This is a masterclass in economic innovation that has fundamentally challenged traditional retail wisdom. Today, we're diving deep into how Costco has not only survived, but thrived by breaking almost every conventional retail rule. To understand Costco's brilliance, we need to step back to 1976, when Sol Price founded Price Club in San Diego. Price had a revolutionary idea that would forever change retail. What if profits came primarily from membership fees rather than product markups? This simple question led to a complete reimagining of retail economics. While traditional retailers operated on the basic principle of buying low and selling high, Price envisioned a model where customer loyalty and volume would drive success. When Jim Sinegal and Jeffrey Brotman founded Costco in 1983, they took this concept and perfected it. By focusing on the membership model, they created a system where customer interests perfectly aligned with business success. The more value members received, the more likely they were to renew their memberships, creating a virtuous cycle of growth and customer satisfaction. The numbers behind Costco's membership model reveal its true genius. While Costco generated an impressive $237.7 billion in total revenue during 2023, their product margins tell an unusual story. Most retailers aim for product margins of 5 to 7%, but Costco operates on razor-thin margins of just 1 to 2%. This seemingly risky approach becomes brilliant when you consider their membership revenue. Those 128 million members generate $4.6 billion in annual membership fees, creating an almost pure profit revenue stream that transforms their entire business model. This steady income allows Costco to maintain consistently lower prices, invest in higher quality merchandise, and pay industry-leading wages, all while maintaining profitability. The true power of this model becomes evident in their 90% membership renewal rate. This isn't just a statistic, it's a testament to what economists call customer surplus, the difference between what customers pay and the value they receive. Costco has mastered the art of consistently delivering more value than customers expect, creating a loyalty that traditional retailers can only dream of achieving. Costco's pricing strategy appears deceptively simple: cap markups at 15%. However, this straightforward rule creates a complex web of economic advantages that revolutionizes traditional retail thinking. While most retailers constantly juggle prices to maximize margins, Costco's approach creates a fundamentally different relationship with both suppliers and customers. This strict markup cap does something remarkable to consumer psychology. It virtually eliminates price sensitivity. Customers shop with complete confidence, knowing they're getting consistently fair prices without having to compare or wait for sales. This predictability in pricing creates predictability in demand, allowing Costco to optimize their supply chain in ways their competitors simply cannot match. The magic of this pricing strategy becomes even more apparent when we examine its impact on volume. By maintaining consistently low prices, Costco drives extraordinary sales volumes, which in turn enables them to negotiate better deals with suppliers. These improved terms then allow for even lower prices, creating a self-reinforcing cycle of cost advantages that becomes increasingly difficult for competitors to match. Costco's mastery of retail psychology goes far beyond simple pricing. Their entire shopping experience is carefully engineered to create what behavioral economists call smart shopper feelings, the satisfaction of believing you've made a savvy purchasing decision. This begins with their famous treasure hunt model, but extends far deeper into the psychology of consumer behavior. Consider their rotation of 3,000 standard items complemented by 1,000 rotating specialty products. This isn't just inventory management, it's a sophisticated application of behavioral psychology. The consistent items create a foundation of trust and reliability, while the rotating specialty items trigger what psychologists call anticipated regret, the fear of missing out on a great deal that might not be available next time. This combination drives both regular visits and impulse purchases in a way that traditional retail simply cannot replicate. The legendary $1.50 hot dog and soda combo serves as more than just a good deal. It's what behavioral economists call an anchor price that influences how members perceive value throughout the store. By maintaining this price since 1985, despite inflation, Costco creates a powerful psychological reminder of their commitment to value. The same principle applies to their $4.99 rotisserie chicken, which serves as another anchor point that shapes overall price perceptions. Behind the scenes, Costco's operational model represents a masterpiece of efficiency that many competitors have tried and failed to replicate. Their inventory turn rate of 12.3 times per year dramatically outpaces industry standards, with Walmart achieving 8.5 turns and Target managing 6.4 turns annually. This faster inventory movement not only improves cash flow, but ensures products remain fresher and reduces carrying costs throughout the supply chain. The warehouse layout, while appearing utilitarian, actually represents a sophisticated psychological strategy. The absence of signs and department markers isn't an oversight. It's a deliberate choice that creates a discovery environment. This approach increases the average time spent in store and encourages exploration, leading to higher purchase rates of their rotating specialty items. Their supply chain innovations extend far beyond the warehouse floor. By establishing direct relationships with manufacturers and implementing strict packaging requirements, Costco has eliminated numerous middlemen from the traditional retail supply chain. Their cross-docking facilities represent another layer of efficiency, allowing products to flow from supplier trucks to store-bound vehicles with minimal warehouse time. Perhaps the most overlooked aspect of Costco's success lies in their treatment of employees. In an industry notorious for low wages and high turnover, Costco has created a remarkably different model. Their average wage of $24 per hour stands well above the industry standard of $14 to $17, while their comprehensive healthcare coverage extends to 90% of employees. This investment in human capital pays extraordinary dividends. The results speak for themselves. Costco maintains a turnover rate below 6%, compared to the retail industry average of 65%. This stability creates a cascade of positive effects: reduced training costs, higher productivity, superior customer service, and accumulated institutional knowledge that improves operational efficiency. It's a profound demonstration that treating employees well isn't just ethical, it's good business. The Wall Street perspective on Costco reveals another layer of this company's extraordinary success story. While many retailers experience dramatic swings in stock performance, Costco's shares tell a story of remarkable stability and consistent growth. Over the past decade, they've delivered an average annual return of 14.7%, consistently outperforming the broader S&P 500 index, while maintaining lower volatility than their retail peers. The company's dividend policy further reflects their balanced approach to shareholder returns. Beyond regular dividend payments, which have grown steadily over time, Costco occasionally surprises investors with special dividend payments. These bonus distributions, much like their product treasure hunts, create an additional layer of shareholder satisfaction while maintaining financial flexibility. The Costco phenomenon represents far more than a successful retail operation. It's a fundamental reimagining of the relationship between a business and its customers. By aligning their profit center with customer value through the membership model, they've created a virtuous cycle that benefits everyone involved. Customers save money, employees earn better wages, suppliers gain reliable partnerships, and shareholders receive steady returns. The next time you walk into a Costco warehouse, remember that you're not just entering a store, you're experiencing a business model that has fundamentally reshaped retail economics. Those membership cards aren't just about access to bulk shopping. They're the key to a retail revolution that continues to prove that doing right by your customers is the surest path to sustainable success. Thank you for joining us on this deep dive into the economics of Costco. If you found this video valuable, please like, subscribe, and share your thoughts in the comments below. Until next time, this is Wealth Squad, bringing you the stories behind the numbers.